Welcome, ladies and gentlemen, to another issue of the Grey Market Talk between, I'm not being impolite here, introducing myself because I can pick up Nick a little bit more later, a former humble market maker, that would be myself, Thorsten Wegener, and the man with the Midas touch, Nick Themistocles, market vigilante, portfolio manager, what haven't you done, trader, and now educator and, private investor. And I'm just picking up a little bit because last week's call was really fantastic. I think we called the low on the interim spaces. The market rallied up into Friday. And now, new day, new game. Nick, what's your take on it? Is the correction rally to the upside over, or are we going to see new all-time highs?
Well, I mean, you remember a couple of weeks ago, we did an S&P chart. And we said, okay, it's going to come down. And is it a big come down? Or is it going to be a little come down? And so far, the little come down has it's held at the little come down. And if it were going to rally to a sort of new high from here initially, then the structure of the move up has got to be in a more impulsive fashion. And the structure today, anyway, or as of Friday, it has been in three waves, in Elliott wave speak. And a three-wave rally is not good enough. So either it's going to have to sort of create much more of a bullish structure early next week, or the three-wave move will just be what would be a correction, and then a little bit more on the downside, and we'll sort of head down and we'll break this 100-day moving average and so on and so forth. So we still have to see how the structure is. At the moment, it is, it's a rally in a bear phase, but neither one is convincing one way or the other. We've got big news next week as well, even though I don't like news. There is big news next week, quarterly refunding, Fed, and all of this stuff. Enough to get people excited.
I was about to ask, 1st of May, month-end rebalancing. Any implications you could see out of that? Nothing?
No, I mean, it's quarterly, yearly, but monthly, no one cares.
Shouldn't we see a nice dump on the 1st of May, which is after all the holiest day of the communists worldwide, isn't it?
I don't know. We have to ask Murat on that one.
Yeah, actually, I thought about that before we went on air. I was thinking about, I'm really curious now what Murat's magic charts will tell us where we are momentum-wise. Because I see that waning a little bit. And let me share the presentation because that kicks nicely into the motivational slide I have prepared for today. Do you see the presentation?
Indeed, I can.
28th of April, 2024.
The size is not perfect, so you've only got market talk visible instead of the grey market talk.
You can't see not
fully. Not fully. I don't know whether that's my screen or.
Let's stop that again and try it again. Because that would be a shame. There are so many beautiful, not many, a few beautiful slides in there at the moment. I share it again. PowerPoint share. Can you see it now?
No, it's still the same. It's not pretty.
How weird is that? That's the first.
Maybe if you want, you can maybe send it to me and then I put it on my screen.
Yeah.
Maybe there's a button on the left. It's only on my screen. Sorry.
Only on your screen.
Make it the right size.
So you blew it, Nick. It's your fault.
Sorry, my fault.
Good, lovely. So, Grey Market Talk, 28th of April, 2024. I beat my dyslexia, and this time it's not the 82nd like last time. So, a motivational slide of the day. So, do not worry. Things can go wrong. You can show really horrible numbers like Tesla did this week. Didn't beat the revenues, adjusted EPS was below expectations, and free cash flow with minus $2.5 billion versus an expected positive $650 billion. Didn't bother the market too much because Mr. Musk had something nice to say about what he plans for the future, and the stock rallied for about 20%. That's good if you can get it, Nick, right?
Indeed, I actually closed my Tesla short around 145. It didn't look too good when it was sort of below 140, but now it's fine. For me, I'm not sure whether Tesla should collapse. I had Tesla in this kind of very long sideways big triangle kind of thing, and I just didn't know where the low would be, somewhere between 120 and 140. I didn't want to be too greedy, and that could be it for Tesla. Now we rally a little bit, do a little bit more sideways. But, Tesla's a special stock. It's what Elon Musk is able to convince his audience, his investors, about his new plans, his robots, and everything to do with that. And they'll ignore the fact that you can't sell electric cars.
Is he still, I wasn't following the news, is his 50 billion paycheck already, has there been made a decision by the courts?
I think they've gone back to the shareholders saying, can you give it to him? But I don't think they've decided to pay it yet.
Think about it. That would be a scenario. He says, yeah, fine. If you don't pay me, F off, I'm leaving Tesla. Somebody else can have it.
Indeed. That would be a shame, but unlikely. But
yeah, well, it's the source of his wealth. Yeah, that enables him to do all the other stuff. So
go and buy another Twitter.
Yeah, so. Well, good thing you're running into the election. So, but anyway, I thought that was actually quite interesting. The impact is one person, an enlightened leader, and I'm not being ironic here. Really, somebody with great thoughts who can run a company, can twist abysmal numbers around. Because what I can hear on, well, like everybody else who opens the newspapers, Tesla is reducing prices to get rid of their inventory.
Yeah.
They have out there in Grünheide in Brandenburg, where they have their new mega factory, they're planning to fire 500 people, which is interesting because they're telling us all the time we don't have enough professional workers here, and they are the guys who are already at the assembly line at Tesla in Brandenburg. There surely are some of the high qualified guys in the market. So it doesn't sound good. It's obviously you can't compare these two, but it sounds a bit Peloton-like for me.
Yeah, I don't know whether it's quite Peloton-like, because that's really a disaster. But the point is, if you want to buy an electric car at the moment, the Chinese are winning that game. The Europeans and the American economies, in my view, for this sector, is not running away on the upside, and therefore maybe it's just sort of had its day, and everybody's got very excited about the Tesla stock, the euphoria that was not just for Tesla, but also a lot of the other names in the market, and it's just sort of coming off the boil. And I think that's nothing more than that. A little bit of reduced euphoria, and let's not forget, there's a lot of, when you get a tech development like AI, and suddenly all the companies in their quarterly reports were saying, AI was every other word that they'd use. It used, a couple of years ago, they used to write blockchain in their thing just to kind of help their stock, and now they say AI. Well, they've got to spend some money, and the point is, when all of these companies spend money on new tech, and it's not necessarily for Tesla, but it might be because he's talking robots. This creates this sort of growth in the economy, a short burst, which is arguably inflationary, sort of what the Fed's got to deal with. But you build up this sort of euphoria. You spend a lot of money, but it takes years to sell the ideas into the world and develop products and all of this stuff. And so, it's kind of right that things just sort of come off the boil a bit. I think
I get it. I saw this hilarious picture. Somebody in California seems to be pissing off Tesla at the moment because he's running around with a T-shirt which has a traffic sign, a stop symbol, right at the chest, and he loves walking around highways, and the Tesla cars obviously are recognizing the stop symbol on the T-shirt and react accordingly into the traffic flow. So AI, I think it's a long way to go. We have there. Anyway, so the motivational slide for the day was Tesla, and then the trust the number slide. I thought that was absolutely hilarious because we had a couple of the big earnings out already. You were an early investor in supermicroconductor thingamay, weren't you?
I missed SMC1, but I was a follower of SMC1 and kept on sort of being too greedy on where I was going to buy it. But still here, I actually still like NVIDIA and SMCI, and therefore, I think these things, I'm just looking to see, is the low, or am I going to bounce from here or not? So I'm in that decision phase, but I still see, ultimately for those stocks, especially Nvidia, much higher highs. And I just want to kind of figure out how far down we go before we, get the next wave up.
You're really harshing my mellow with
I
seeing
know.
Nvidia
I'm
much,
sorry to
much
say
higher.
that.
So anyway, Netflix obviously ticked investors off by telling, in 25, we're not going to tell people anymore how much subscribers we have, which is a big, big, big mistake. That was the one reliable number people had actually to track it. If you take that away, sorry, how are you going to make your future judgment calls? Huh?
Sure.
Then Meta disappointed the market, and now the Grim Reaper is knocking on the Nvidia store. And for me, yes, I know you see more bigger, super all-time highs. I thought there are now so many chips around, and this AI, I'm using it, I'm trying to use it quite a bit at the moment. It's not working, Nick. It's stupid.
Yeah, so that's the kind of the non-techie bit in the back of my mind is that there's what I was talking about before, when you spend an awful lot of money on this stuff and it takes years to kind of figure out how really to use it and embed it into your processes and systems and all of this. So, it could well be that, again, the Nvidia bounce is like, the market bounce, and it just sort of is something that is just a temporary bounce, and things need to come off the boil a lot more than they have.
I think it's comparable to the internet. We are both old enough to have experienced that when the internet actually took off. I started working in an office where we were sending out brown envelopes with letters in, which you ticked off if you wanted to send a note to the colleagues, and that came all with email and internet stuff. And then we had this huge hype in 2000, but then it took a couple of years for people or corporates actually to find applications for it, to get paid for it. I think the same is with Nvidia. Everybody was going absolutely batshit crazy. They bought these new chips, and now they actually have to come up with viable business models. While Nvidia is producing probably tons of this chip, and the backlog doesn't know actually how to monetize it. How do I get people to pay me a subscription fee for really useful work?
No, and this is the 64,000 million, whatever it is, question for how this new tech is playing out. But as I say, it's causing the Fed a little bit of consternation, because everybody is just chucking money at software and the like these days. I mean, it's the biggest component, or one of the bigger components of the pretty sort of low GDP number we got this week. So, this investment is, important, but it will take a long time to actually play out.
We're going to the GDP numbers in a second. Let me first slip that in. A slide I came across, Morgan Stanley Research, and they simply looked in the key drivers for stock performances, calculated from 1990 to 2009. And I found that very interesting, because it's one of these eternal wisdoms. We all know that they're going to happen. It's just that the market sometimes missing the mark where we are. What it says from 1 year to 10 years, what is actually driving stock performances? And we have the four big drivers in here. Multiples, short-term, extremely high. Free cash flow, always important, but not that big. Then the margins, obviously a big point, and revenue growth in the long term. That's all what counts. In the short term, what is interesting us at the moment, it's multiples. Nick, one of the things I was asking myself, what is missing here? What everybody else is talking about as well.
Well, I'm sure you're going to say, well, what's driving multiples? And the thing that's probably driving multiples is stock buybacks.
Yep.
But the thing that interests me, which I've just noticed about the chart, is 1990 to 2009. It's basically is explaining what does it look like, I guess, at the top of the market. And at the top of the market, it looks like multiples have gone bananas, and over a long period of time, that's going to be your indicator to say, don't go and buy overpriced stocks. And I think, in many instances, not on all instances, but on many instances, a lot of these tech stocks, notice I don't say about Nvidia, are sort of on, very, sort of sky high multiples. Driven by their narrative of, the company is just going to buy back the stock, or create a narrative, get everybody involved, see it, a ton of flows from overseas. It's the same thing I think that's happening in the current environment, and that's why some time ago I started saying things like Apple should be buying small caps, with their shares. You look at the performance of Apple versus small caps. Small caps have done a lot better than Apple. So there comes the time, even though it's easy to just go and buy an Apple stock or Meta or whatever it is, they have to continue to perform with their earnings expectations year after year after year. And I think, this, what happened with Meta and all of this stuff is probably their way of just saying, this is probably a year we're going to let people down a little bit. And obviously that's not the case with Microsoft. They had some reasonably good numbers, but it shows that if not everybody is playing the game, then this sort of multiples level will start to compress, and that will affect your total return on equities over the year.
What you just described scares the shit out of me, that there was this one thing Marx might have been right about: concentration. Yeah, you have the big super mega corporates whose only way, if they are not innovators anymore, is to buy innovators. So the innovators themselves are not able to compete against an Apple or Microsoft or you name it in the market anymore, because the moment they are on the threshold of producing something which could be a competitive danger for the big ones, they're being simply bought up by them and disappear in their conglomerates.
It's interesting that the market is punished. I mean, if you look at what happened with Meta, right? Meta's numbers were okay, or so some people might say they're brilliant. But what they didn't like was the sort of forecast spend for next year on AI and all of this stuff. In other words, they're saying, well, look, we don't want you sort of buying into a fantasy. When are you going to, when is fantasy going to translate to revenue? If we want fantasy, we go and buy NVIDIA.
It's every time when the suck comes out with something like, ooh, the metaverse, the market was punishing him. And then he turned around and said, now I show you how to make money with advertisement. The market loved it, went up again. And now he's at the old shenanigans again. Oh, yeah, we're going to spend money into our meta AI, blah, blah, blah. And the market doesn't like that. They want to see it as the cash cow.
Absolutely. You don't want sort of stories. You want reality. And if the company is chucking a lot of money, they better be pretty damn sure that they're going to deliver on earnings.
Well, only Elon gets away with that, not the suck. So our cycle time. We had a pre-show argument about it when I said, okay, Nick, in the cycle, where are we now? Are we still in reflation, or are we topping out? And you said you didn't think that we were in reflation. We were in the Goldilocks all the time. Explain it.
Yeah, I mean, I just think this notion of, what is reflation, what is Goldilocks? For me, Goldilocks is an okay level of growth with a reduced inflation. And up until now, inflation has been coming down. And on the basis that inflation has been coming down, my view is that we're in a Goldilocks kind of world. The reflation world is having an okay kind of growth, but with a much more increasing inflation. And I think the only inflation that's increasing right now is the narrative. So people are getting very excited about, we're not at 2%, therefore inflation must be rising. But I just don't see it, I must say. So this, I said it in a few videos ago or last time, or I can't remember what, I think this whole inflation thing is about how do you measure CPI today. And at the moment, with money supply still sort of going very, very low, and CPI numbers, which they say, core PCE at 2.7, well, 2.7 or 2%, it's neither here nor there to me. It's still very close to the Fed's target. What we had before with inflation was 9%. We're in a different world. And I think, again, if you were to sort of look much deeper into this CPI calculation, you've got this element of shelter, which is calculated on owner's equivalent rent. 25% of that CPI number is a number which doesn't reflect the kind of rental increases that are reality. And the reality on rental increases, look at Zillow or all of these other sort of benchmark things, they're all far lower. And I saw a chart this week of US CPI calculated in European standards. I think it was Dave Rosenberg, I'm not sure. And according to that calculation basis, the inflation CPI equivalent European calculated version, that's a sentence, is about 2%. So what's the problem? The only problem with inflation comes down the road, and we haven't had that problem yet, and that's what the narrative is for gold, is understanding that in the future the Fed have to print, and they haven't done that yet. So the current phase is Goldilocks, low inflation, not reflation.
You just threw the number in. GDP, preliminary GDP was at 1.7% and was expected
1.6, yeah.
Was expected far higher. I agree with you on the inflation side because, well, I'm very old school. I think if an economy starts dropping, inflation will not rise. Yeah, that's it. That is the last hooray. What will happen then next is the governments will start printing money like crazy again because they have to, and then we see the rise in inflation, which is my, I don't know, notion of why we see gold already performing.
Exactly right. That's exactly correct in my view, or exactly in line with my thoughts.
Gold is preempting already what's going on. And I found this beautiful chart, Bank of America Global Investment Strategy from Bloomberg 2024 year to date. And it shows the last 20 years ranking. Do a screenshot. This is really fantastic. Rank cross asset returns by year since 2000. And in the top line, you can see the best performing, obviously. And Nick and I had a go about that a little bit earlier because I'm introducing to my students this evening modern portfolio theory, Markowitz, how to structure your portfolio. And one of the things, if you just look at the top line for the last years, Nick, I give you the word because you immediately said it. What does that tell us?
Yeah, I mean, you know, when you're looking at portfolios, you've got to sort of, the traditional thought is the main asset class is stock bonds, right? So people say, how many bonds you can have versus your stocks, and that's your asset allocation. And then maybe like 5% gold just for a laugh, just to reduce the volatility in your portfolio. Okay, so because of the lack of correlation. You know, that was the old world. From COVID, when the Western governments predominantly started to print an awful lot of money, that world and that asset allocation changed. And nobody really understands this because they still play around with okay, let's do 7% gold instead of 5% gold. Oh, let's have 60% equities and 33% of bonds. That's total nonsense. The world post 2020 has been a world of inflation, monetary inflation, which has been monetary inflation different to price inflation. So don't get confused with CPI and anything else. The monetary inflation that took place at the time will continue and reverberate for years because that was just the first round. The second rounds come, you know, in the next phase where overseas governments stop buying treasuries full stop and where they replace treasuries fully with gold because gold is the risk-free asset nowadays, in my view.
Well, so, nobody's liability, right? Gold is nobody's liability.
You can't go bust with gold, right? So, you know, it's going to shine there. It may not do very much for you, but it's going to shine there forever, for 3,000 years. And the point about your chart here, which is very good, 2020, 21, 22, the three top performing asset classes were gold, commodities, and commodities. Then you had 2023, the supposed big recession year from all of these, you know, the classic asset allocators got to sell equities. Well, they were wrong and equities did improve. And again, let's go to this year. What's happened? What's been the best performing? Gold. So 4 out of the last 5 years, you've had commodities as being the most important part of an asset allocation in the portfolio. And the question is what commodities, you know, how much gold. But one thing's for sure, when you look at this thing, you have to say it's going to be a lot larger than it used to be in the past. Stop faffing around with 3 and 4% gold in your portfolio. You need to have something a little bit more serious. And for those that have done so, have done pretty well out of this thing. For those who don't do it in the future, I think will be a problematic, because treasuries, we talk about next week, quarterly refunding announcement. When did quarterly refunding announcement used to be important? Never. I used to trade bonds. I used to love the auctions. You can go and buy something. Nowadays, you have a quarterly refunding announcement and the government effectively say, well, we've got to borrow some money. Everyone's like, oh, God, not again. How much have I got to buy at this time? And is it in T-bills where the money market accounts at least can buy that and forget about them because it doesn't affect me? Oh, no, they could have forced me to buy 10 years. And this is the problem. And they don't like it. And that's when the Fed have to come back in because the foreign government's not buying, apart from the geopolitics of all of this thing. This is just the debt situation in America is forcing you to rethink your asset allocation, your strategic asset allocation. And as I say, I reckon most of the market is still sleeping.
Yeah, absolutely. Especially if you see the sliver gold at the moment has in a global asset allocation. It's almost if you observe it or analyze it a little bit longer term, there barely is enough gold up there if all the big players are actually increasing their asset allocation. Meantime, you have central banks buying it, the shiny stuff. So that could be one of the longer trends. What I also found interesting is commodities. Yeah, we don't talk a lot about it. I'm an equity boy, you're a bond guy. But in these charts, yeah, having a sizable amount in commodities seems to be the right thing to hold.
Well, if you look at what's going on with copper, I mean, I remember in the first video you asked me about copper. Now, I didn't answer you particularly well, so don't go and replay the video. But the point of if you were China these days and, you had threats of Cold War again with America and don't help the Russians or else and all of this stuff, what would you do? Just go and buy some stuff, go and buy some copper. You want to prepare yourself for the new world. And the new world needs copper, and the new world needs all sorts of other stuff. And then you say, okay, well, what don't I have? I don't have confidence in my currency. I can't go and offer people the Chinese currency. So what do? As I say, look, if you buy the Chinese currency, don't worry, I've got enough gold in my reserves. So, if things don't sort of work out for our economy, you've got some stuff there to back it up. Not like other countries, who've been quick to sell their gold as soon as it went up to £400, dollars, whatever, England. So that's the fact.
Let me give a quick shout out. Lynn Alden published her monthly newsletter. It's free of charge, comes out every month, and she also has a couple of fantastic links into different portfolio allocs in there, links to other websites. Everybody who's interested in that should definitely check it out. Because I'm with you with this. The time we both grew up in the market seems to be over. There needs to be a new allocation of portfolios to make up for the peacetime we had for the last 20-25 years. Times have changed, so definitely worth giving it some consideration and diving into portfolio theory again. Let's finish off with the fear and greed index. That was 3 weeks ago. I simply left them in the charts. We were on neutral. That's when we already, or I short-term smelled a rat there, and I said to my students, just because we are now not in greed territory anymore and going down to neutral, that doesn't mean you can use it as an indicator to employ to the opposite. That simply means people are not interested in buying anymore. And we saw the correction. We went into fear territory, and that's where we are at the moment. We're still in fear territory. I think markets will technically, and that seems to be the game of the moment, people are looking at a stupid 21-day moving average. I've noticed that for a couple of weeks now. Are we diving below it? You see sell orders coming in, then we try to rally again and check out, are we able to close above 21 days or 20 days again? You see all the stop orders being hit, and that's what the S&P seems to do at the moment. I have a short-term long-in since Monday, one of our models, which was created by Falk. One of my super quants gave a fantastic signal. Doesn't give a good signal at once, but so far it worked nicely. I was a bit too greedy. I should have closed it on Friday, but I thought, I'll give it a Monday and Tuesday still as well to see what's going to happen. We are still in fear territory. Maybe we have to take out some stops to the upside. And then what you mentioned earlier, the momentum has, I don't know. It's not looking like it did a couple of weeks ago again anymore.
It's not following through at the moment, and we have to see whether that follows through on Monday, Tuesday. And as I say, I think for the people who follow the daily news and these little interactions, these ups and downs in the markets, quarterly refunding, is going to be fairly critical. Monday, Tuesday, I don't know, Wednesday, Tuesday, Wednesday, I don't know which day it is, probably Monday. That's going to be the focus for everybody. How much are they going to issue, and how much of that is going to be in T-bills versus 10-year? Because that actually sort of changes the liquidity in the system. And, that's either a good thing or a bad thing.
Well, Mrs. Yellen put it into T-bills, because nobody wanted to have the longer term stuff. So when is she completely loaded up?
Well, she's got enough money, to be honest with you. She's just got some tax money, and therefore her account is actually sort of to the brim. So technically, you would have thought that the actual volume that they issue will be less or lower than, more likely to be lower, because the tax take was higher. So that might be a bit of good news for the bond market. I mean, God knows they need some good news, but we have to see the split between the money market and 10-year, and what drives that and how that's going to play out. Honestly, don't know.
So not the time yet for the vigilantes to come back, simply saying, no, I'm not buying your 10-year shit at that levels.
Well, there's they'll do it behind the corridor. We won't hear about it. They'll just phone up, Mr. Powell, and say, when are you going to kickstart QE again, or sort of do a reverse QT or whatever you want to call it this time, because it's necessary. There's just not enough capacity in the system to feed the Treasury demand, and especially, the interest burden. We look at all of this thing with interest rates rising and so on. There is a consequence, and that consequence is that the interest burden is just so large for the government. It becomes, what does the government do? It looks at this thing, it says, oh my God, I've got a lot of interest to pay. All right, what we're going to scratch off a list. All right, let's scratch off local government, sort of budgets. Oh, let's scratch and education. Oh, then let's get the health service, because, I haven't got any money for that.
Yeah.
And then do you honestly think the final thing they're going to scratch is defense? Don't know. They'll probably go and start a war somewhere before they do that. But that's the consequence of it, because it is such a large number that, it's reaching that defense level of spend. And it's probably higher by now, and it certainly will be higher over the next years.
Well, a beautiful last word. Thank to all of our viewers. We have another exciting week ahead of us. I hope to see you next Sunday. If you enjoyed that, like, share, visit Nick's website. A lot of great institutional training content coming up there now. And I'm an ardent watcher to, brush me up a little bit on what I used to learn and forgot all the time. So that's my last recommendation for you. I hope I see you next week. Thank you very much, Nick, and have a good week. Bye-bye.
Bye-bye. Thanks, Lawson.